Okay. Okay. Thanks, Perry, aka Superman, for that introduction. Before I begin, I just wanted to give a special shout out to Kelvin and the Sequoia family. It's an honor to present to y'all again. I wish I could see y'all. I totally missed y'all. Well, my name is Christine Chau, and I own my own real estate company. I manage about 120 doors. A large focus of my business is investors, helping them earn money through real estate in a very hot market. I manage over 120 doors, handling everything from the initial purchase to the leasing to the management, and then the selling part whenever they're already reached their goal and ready to go on to the next project. And so I also manage Airbnb properties, which are super hot right now because there's so many recreational activities are closed and we still have a shelter in place. Okay, so here's a snapshot of some of the large businesses in Austin. As you can see, we have all the big names. We have Apple, Facebook, Oracle, Amazon, and that's why we're called the Silicon Hills. Austin is basically a new version of California's Silicon Valley, which is but we have much more affordable real estate, right? About 169 people move to Austin a day. We have low unemployment. And as you can see, Austin and nearby cities are surrounded by tech. You know, we're very tech heavy. There really isn't a bad area in Austin to invest in. You know, I have a lot of investors that ask me, well, where's, you know, the best place to invest in? And it's always depending on your budget, you know, and depending on your risk tolerance. But yeah, there's really not that a bad place to invest in. You know, I have some investors that are fine with positive cash flow, that's what they're needing. I have some investors that says they're fine with getting a more area that's a lot more appreciating. And so we're doing that time, you know, there'll probably be less cash flow. So here you can see a few awards and ratings. Basically, we're #1 in everything, right? It's hard to kind of keep up. We're frequently cited as the #1 city for many years. Our tech industry, our quality of life, our outdoor recreation. Austin is very dynamic, and it's also you know, Austin is very dynamic. We have very low inventory, definitely very aggressive. Okay, so I'm just going to kind of focus and kind of narrow on a few subdivisions, sub areas in Austin. In this area, you know, where Apple, they had announced in 2002 that they're coming to Austin, and at that time, everybody was just buying everything around it, right? Which I would too, right? And so in that area, you know, a typical house in 2012 was $178,500. Today, if you were to purchase that same house, it's worth $382,250. And so my husband and I, we started investing around 2010 to 2013. You know, we bought about 7 properties at that time. And now our whole portfolio has more than doubled. And so, you know, I would say my husband is a little more conservative, right? His goal was to pay off the mortgages as fast as possible. And so which drives me crazy, right? Because I think I'm a little bit more aggressive and I want to leverage more and I want to acquire more properties. But I'm glad that I had him manage the money because he took all the rents, applied it to the mortgage, and then now we only have a few mortgages left. So that's pretty cool. You know, going back to, God, I got sidetracked. Apple, going back to Apple, they had, let's see. Sorry.
I just wanted to address the issue with the beeping here. So the beeping is coming from people that are chatting in the chat. So if you guys can please refrain from asking any questions or typing out any questions right now as the speakers are speaking. We will have a Q&A session right after this. Go ahead and put your Q&A chats or questions in the Q&A tab after Christine is done speaking, and then we'll address it there. So I do apologize for the beeping. We are working on trying to mute that. That is a bit distracting. For at the moment, just refrain from having any comments or questions right now, as it's distracting, some of us and the attendees. So appreciate it. Sorry, Christine, go ahead.
No worries at all. Okay, the graph next to it is the domain area, and that's also where we have a lot of heavy tech. There is a hospital over there. Right now, whenever you come visit the domain, that's probably an area that I'm probably going to take you to. They have a lot of like outdoor shopping. They have outdoor restaurants, and so it's just a really cool area. And then as the same thing, if you were to buy, if back then you bought a property, say 3 bedrooms, 2 bath, 1,500 square feet, it would have been $195 in 2002, and then in current 2020, it's projected to be $429, $119. So that's amazing. Double the growth, right? So I wanted to give you a couple of examples, and so the first one is going to be 13001 Wedge Drive. And so I checked this morning. I chose this property on Thursday. I checked this morning just to see if it's available or not. I did send this property to a few of my investors. But anyways, listed for $245. I knew that this property is going to be hot because it's in that domain area, and so it's about 3 bedrooms, 2 bath, 1,147 square feet, and right now currently it's pending. Right, 3 days in the market. So when I had done this cash flow analysis, I had, if you notice that the list price is $245, and I put a purchase price of $255 because we make offers to win, and so I don't even think this property that we could have got for $10,000, we probably had to go higher. But usually, if I send you a cash flow analysis, I'll usually have 2, right? Have one at full price, and then the other one I would have maybe a suggested price that I think we should go for. Most properties that you're going to look at probably going to need some remodeling, like fresh paint, possibly new flooring, and new fixtures. But otherwise, I would say this would be a good buy after all expenses, which means your your mortgage, your taxes, your insurance. This property is going to cash flow about $284 a month, so that's amazing. And then also, don't forget, this property does cash flow quite a bit. One thing I also want to mention on single family homes is that it's really going to be hard for you to cash flow with 20 or even 25%. This property, you're able to cash flow at 25%, but normally it's going to be more like 25 to 40%. And so if you're fine with that, then you can just count on having a little bit of cash flow and the appreciation. So on the second example, what I did was is a duplex, and this is a property that I had acquired for one of my clients back in 2014. The value then that we got it for was $204, and that one was multiple offers, and I think we went like 5,000 over. And so we got it at $204. The value currently is $340. I mean, that's amazing, 67% in 6 years. And so with duplexes, you're going to have to put down 25%. It's not 20% anymore. But a lot of cases, you are going to be able to cash flow at that amount. But again, it all just depends on location, right? People ask me all the time, is it too late to get into the game? Everything is so expensive. But you got to start somewhere, right? You got to start somewhere. That's what my husband said in 2012, 2010. He was like, everything's expensive. We can't, let's just be really cautious. But I feel like when you're ready to buy and you have that mindset that this is what you're going to do, I think that's the right time to buy. So the big buzz now is Tesla, right? Everybody Tesla is so exciting. They're gonna have their gigafactory in Austin. It's gonna be located close to the airport. It's really in a like a rural area. Still a lot of growth that's happening over there. Still, there's some good land opportunities if you're interested in investing out there too. I'm sorry, I don't mean to keep on saying out there, but it's just a little bit outside of Austin, probably about 15 minutes. So not too bad. It's a great location. So a lot of affordable homes too. You know, the tax rate is lower. It's 1.98. You know, I see 2.33. So usually the tax rates in Austin are like 2.4, 2.6. And so, yeah, it's still a great place to invest if, you know, you're interested in that. And also, just to sum it up, right? I mean, I know I touch on it super duper quickly. I just wanted to focus on a certain, you know, a couple areas. But you know, Austin is such a great place to live, really to raise a family. But if you want to invest, it's awesome, right? I mean, with investments, it's like no emotional attachment, right? It's all about the numbers. It's all about location. You know, it could be about you know, appreciation, and so you should consider investing here. Thank you. Does anybody have any questions for me?
Very knowledgeable. If anyone has any questions right now, go ahead and put it into the Q&A chat here. And we're going to give you the option of audio or video. So, you know, want to be respectful, not like force your, you know, morning face on here. So, so let's go take a look at the Q&A chat right now. Looks like we have, oh, all right. If you're ready, Torrance, it looks like Torrance, our very own presenter, Torrance Ford, has a question for you, Christine.
Okay.
Hey, Christine, this is gonna be fun. We're gonna keep it fun. What's the average rent in Austin, Texas, for you guys? Like, what's a range? Like, what's the average, and then what's a range?
Okay. So, like well, it just depends because the south part of Austin tends to have a little bit higher rents because we have a lot more millennials, like, and you know, millennials eclectic. I mean, not eclectic, but you know, and then north part of Austin is going to have a lot more families. And so, for example, if you were to get a, you know, central property, 2 bedrooms, 2 bath for 600 square feet, probably be like about 1,700. But if you were to get a duplex up north, 2 bedrooms, 1 bath for, you know, 600 square feet. No, I'm sorry, not 600, super small. Probably 900 square feet. You can probably get it for 1,250.
Okay. Okay.
Mm-hmm.
Cool.
Yeah. Mm-hmm. I mean, I think it's still relatively expensive, you know. But just like you, Torrance, I mean, our market, leasing market is super strong. I mean, one property you have, you know, 3 or 4 applications, but then I'm noticing that you're just gonna have to filter to them, right?
Right.
So,
I just hear Austin's a party town. You guys have a lot of fun in Austin.
we had a little bit of fun. I mean, right now all of our bars are closed down, right? We still have shelter in place right now. I'm probably going on for a little bit longer, but yeah, it's kind of it's the vibe is still out there because there's so many outdoor activities that you can go out and, you know, there's still a little bit loud live music, but definitely a lot of the bars, 6th Street is pretty dead. So
Okay. Okay.
mm-hmm.
All right, Christine, we're just going to take, for the sake of time, we're just going to take one more question in the Q&A chat. And then for everyone else who asked a question in the public chat, if you can please just go ahead and private chat Christine yourself. And with those questions, she'll go ahead and address those. So we're just going to take one more from Tracy here. Tracy, are you ready?
Tracy, your mic is available if you'd like to ask your question.
I mean, I can read it. Do you want me to read that? What resources can you point to help new investors put together cash flow projections for a property. And then, so I like to use bigger pockets. I can probably send you like a formula that, an easy formula that, you can probably use. And then it says, what do you look at to determine your property's rental rate? And so just, the comparable market, basically the comparable market. But like all my properties, and I've been very fortunate to have owners that aren't slumlords. I mean, we put a very good product out there. We have all fresh paint, flooring, fixtures. And so every single time my clients acquire a property, they know that they're going to have to invest some money into there. So then that's how I'm able to get maximum rents. And so I think just working with a really good agent, and if you can find a good property manager, that really would really help.
Christine, if you don't mind, could you actually? We had one more before Tracy from Min. It's how is the multifamily inventory in Austin?
Oh, it's super low. Forgot to mention that. So right now, multifamily is super strong. That's all I manage. A majority of it's probably like 70% of my portfolio is duplexes, and so it's super hot. In fact, you can't even view the property before you put in an offer because there's both sides and all the restrictions right now. You're going to have to put in your very strong offer. Hopefully, you get it under contract, and then you're going to have to put in some strong what they call option money. So your option money would be your protection for about 7 days. And so, say you like this property, $400,000, you just put in your best offer, get it under contract, offer $200 or $300 option money, go view the property. You don't like it, then you're out that option money, but at least you get your earnest money back. And so it's super aggressive, but I do have relationships with different groups of that's off market. And, we do have a bunch of wholesale deals if you have cash too, because cash is making a comeback right now. And so I think just working and having a relationship with an agent, with a strong agent that really knows that market would be the best fit.
Perfect. Thank you, Christine, for answering that question. So, Stephen, I'm sorry, we don't have enough time right now to get to your question. Can you go ahead and please private message Christine directly with your question, and she'll go ahead and address it. For the sake of everyone's time, and it's Saturday, so we don't want to keep it going. We're going to keep it moving along. So, Christine, thank you so much again. Definitely always a pleasure for you to drop your knowledge on us and your expertise, like I mentioned on social media. So we're going to go ahead and move on to the next presenter here.